And I think the opportunity now is to rise to stardom in the on-chain creator economy. But this time, instead of being in a walled garden where the platform takes 95% of the value, it's going to be in an open garden where you earn 95% of the value. And I think it's going to lead to much better outcome for creators all around the world.
Hello, everyone, and welcome back to the Crypto Playbook. This week's episode is dedicated to corporate blockchains. I'm Jeff John Roberts.
And I'm Leo Schwartz.
I know you might think that sounds dry, but hang on, this is actually really interesting. You've all heard of, blockchains, of course. You got your Bitcoin, Ethereum, Solana, and all that stuff like that. But what we've seen the rise of lately is private companies' blockchains. You've got things like Coinbase's Base blockchain. We've got Stripe's Tempo blockchain. Leo, I believe you and Ben broke the story on that. What exactly is that?
We did, yeah. So Stripe, obviously one of the largest fintechs in the world, last valued around $92 billion, still a private company. They operate in the payment space, and they've been doing a lot in stablecoins recently. And they just announced, or I should say we initially broke the story, that they're going to be launching their own blockchain in partnership with one of the largest crypto venture firms, Paradigm, called Tempo. I think we'll talk about this, but the idea of a corporate blockchain is that, like you said, a company will have its own blockchain, whether it's a private one that they control the permissions around or a more permissionless one in the spirit of Bitcoin, where there's other validators or parties who are maintaining it. Stripe argues that the one that they're doing, Tempo, isn't necessarily a corporate chain because it is permissionless. It allows for other players to be involved and to send money and build applications in the way they want. But I think the overall question for this episode is why we've been moving away from these more decentralized blockchains like Bitcoin into companies from Circle to Stripe to Coinbase doing their own.
Yeah, I have mixed feelings on this because, there's a fundamental tension here. The purpose of, Satoshi's vision was decentralized, getting away from, sort of corporate government overlords, and anyone can participate in a chain. But if you are, a blockchain spun up by a giant corporation or public company like Coinbase or a giant private company like Stripe, can these companies resist putting their fingers on the scale to design the rules in such a way that, it doesn't favor them? And, because obviously if you control the blockchain, you get the fees going, associated with it. You get sort of maybe the surrounding halo of being a leader in the space. But I think we should also acknowledge there's expertise here. I know Coinbase believes deeply and passionately in decentralization and blockchain, and goodness knows they've got the experts to back it up. But what do you think? Is it possible that these things can decentralize and become just another blockchain?
I think it depends on the architecture of each blockchain and the way it's actually going to function. I think the argument for why a company would want their own is because you control the full stack more, meaning you actually control what types of money movement or applications are being built on it. In the case of Stripes, for example, it's a payments stablecoin focused chain. So obviously that's the space they're in. They want to emphasize that. You can also have your own token that's native to the blockchain. That's a way that many blockchains and foundations make money, like ETH or Solana. I think a lot of these chains that have popped up have said they're not necessarily going down that route. Coinbase initially said that they wouldn't have a token for Base. That seems to be changing now. Stripe still hasn't really given a clear answer, but they say, look, this is for everybody. It's not just for us. Even if you do fully build out that permissionless system where pretty much anybody can use it and it's not controlled by any given party like Stripe, the question is whether their competition would come to it. And I'll be curious from your conversation with Jesse today, who of course is one of the architects of Base, who really is using Base, who it appeals to, whether competitors in the space would actually come on board to it.
Yeah, I think that's the fundamental question. And I'm thrilled to have Jesse. He is a real kind of OG in the space, and he's passionate about it and believes deeply and has done a lot of impressive things with Base. We'll turn to him in a second, but first, a couple quick final questions. Leo, you're all on top of this. Who else is putting up new blockchains? We've got Stripe and Coinbase, but who else is launching blockchains?
Yeah, so Circle, which of course is another stablecoin company, has their one they just announced called Arc. Tether, another stablecoin company, has a couple that they're working on. One is called Plasma, the other is called Stable. And then you have a number of traditional financial institutions, mainly banks, who have been working on their own private blockchain. So these are ones that don't even pretend to be decentralized or permissionless. They say, yes, we're controlling this as sort of a walled off garden approach, but they're doing their own blockchains to be able to facilitate money movement. So this is really becoming what the next wave of layer one blockchains look like.
Yeah, and final note, I think we always have to have the historical context. There's kind of nothing new under the sun in crypto these days. And in 2015, during a crypto winter back then, there was this rise of this saying called blockchain, not Bitcoin. When the idea is like we're just going to use this, and at its best, it was sort of forks of Ethereum. This company called like Hyperledger that tried to make kind of sort of private or kind of controllable Ethereum forks. And then there was this consortium called R3, which raised gobs of money from the banks, and then as far as I can tell, just like frittered it away. R3, I'm sorry if you're still out there, but it was it was a joke at the time, and I think it's a joke now. But it also left a bad taste in people's mouth about corporate blockchains, and people just thought they would fail, for the reasons we've said. But, maybe this time it's different. And I think the person to tell us whether it is or not is Jesse. Without further ado, let's turn to him.
Jesse, we meet again. Thanks so much for joining the Crypto Playbook. How are you today?
I'm doing great. Happy Monday.
Happy Monday to you. Just let our listeners know I've interviewed Jesse a few times. I try not to be a fan, but it's just I like meeting. I like Jesse. He's built something. He's a founder and creator, and he's doing some cool stuff when a lot of people in crypto are a lot of talk. But Jesse went out and built Coinbase, a blockchain. So that's what we're here primarily to talk about, which is company blockchains. They have a rocky history. They're in a new chapter. But I want to start with the real basics, Jesse.
Yep.
How do you go about building a blockchain? That's kind of a big lift. So, what did you do to make that happen?
Yeah, well, when we were thinking about kind of Coinbase's future back in 2021, I just finished 5 years building the core business. And I spent about a year trying to figure out what would it look like for Coinbase, which is a crypto business, but has also been around since 2012. So kind of predated Ethereum, predated smart contracts. What would it look like if we kind of brought the best of that into this new fully kind of crypto world that's starting to emerge on chain. We spent about a year trying to figure out what that meant. I went through a bunch of different ideas. None of them worked. And then after a year of trying and failing, the key thing that stood out to us was, as we started thinking about, okay, we want to build more products on this new technology platform with smart contracts on chain, as we call it. One of the big questions we kept asking ourselves was, okay, we want to build. Where do we build? Like literally, what is the platform that we write those smart contracts on? How do we make sure that platform works at our scale with our security requirements and actually connects us into this broader global economy? And that was kind of the origin story of Base. And then from there, the kind of funny thing about building a blockchain is that a lot of the technical parts aren't that hard, at least not to get started. We built the first version of Base with 3 people, me plus 3 people. It was kind of a hackathon project. We shipped the test net with a similarly sized team. By the time we got to the main net a few months later, the team was a little bit bigger, but bringing the actual core chain to market wasn't a super huge undertaking. Now, what has been a huge undertaking is all the stuff around the chain, right? The core technology is one thing, but then actually building out an ecosystem, an economy, the tens and tens of thousands of different companies and builders and creators and community members who over the last 2.5 years have come together to make the Base economy what it is.
I want to get
really hard.
Jesse, that's a great point. It's true, because there's lots of blockchains out there, and I think some of us in the press call them zombie blockchains. They're there, but there's no one on them. But I want to get to the point of how you get people on there. But first, just sticking with the technical thing for 1 sec. I know, like, early blockchain crypto days, the earliest secondary blockchains were basically not clones, but kind of forked from Bitcoin, like Dogecoin and Litecoin were just variations of Bitcoin. And then there's been things that have been, variations of Ethereum. You went with a L2, a layer 2 in Ethereum. So Base is built on top of Ethereum. That's sort of it makes it lighter, it's quicker. But when you go do that, was there a bunch of like pre-existing code you just kind of, go and grab and tweak for your purposes, or do you write it from scratch, and what programming language do you use to do that?
Yeah, so we collaborated with a group called Optimism on an open source tech stack called the OP stack, which they'd been developing for a couple years at that point, and we kind of took in collaboration with them and repurposed for Base, and then now we're a core contributor to that stack. So we've been shipping updates, we've been scaling it, we've been helping decentralize it, and then that stack builds on the EVM and Ethereum and a bunch of the clients that run Ethereum. And so I think it's a really great illustration of just how much open source and kind of this shared technology collaboration kind of ethos is at the core of crypto, and it's really what enables both Base to move as quickly as it does, but also other ecosystems to stand up really quickly.
Yeah, as a longtime tech reporter, I've always found open source works better than closed. And just, I mean, would it go too far to say that sort of the, kind of sandbox you're operating in is a bit Linux-like? Is there just like lots of stuff out there to help yourself?
100%. I kind of think about the EVM as Linux. It's like the general purpose, base layer operating system that then a lot of other chains are built on top of. In the same way that you have the Mac and PC and other things kind of deriving from a shared kind of underlying standard as well. And then going back to your question around programming languages, it's most of the original stack was written in Go. We've moved a lot of the stack to Rust because that's been able to give us more performance. But in general, it's all kind of like traditional backend languages for the nodes. And then when you're actually writing smart contracts, people are using a new language called Solidity. That's this kind of like gold standard for writing smart contracts on platforms like Base.
Yeah, that's Vitalik invented that, right?
Yeah, Vitalik invented it. And Vitalik invented the EVM. I think we can kind of trace a lot of the lineage of Base back to the work of Vitalik, and it's been awesome getting to continue building with him and accelerating their work as well.
Great. And final question, does this mean that Base is itself open source and people can audit its code and all that?
100%. Yeah, this has been a core belief from the beginning that we have to build with open source, open standards, and open markets. And so Base is fully open source. All the smart contracts, all the node, you can go to our GitHub, you can read it, you can run it, you can participate in validating the network. And also, it's not just open source, it's built on open standards in a way that connects us to this broader global economy. So as we were thinking about building Base, one of the things that felt really important to us is that we didn't want to build another island. Like we didn't want to cut ourselves off from the rest of the ecosystem. And so that's why we built as a layer 2 on Ethereum. It's why we built on the OP stack as this open source standard. And it's why we, also just launched a bridge to Solana, because we think that the broader crypto economy is going to be richer and better and more effective if everyone is connected rather than isolated.
Yeah, no, as a reporter, just got to drag all these new chains after new chain, and they say they want to do X, Y, Z, but you just know they want to like issue a token and make money off it. And, they performed about as well as you'd expect because people don't really need them. What I'm curious about though too, there really does seem to be an organic community around that. I think part of that was, you were kind of the dude because, the reality is, projects need leaders. We want decentralization, but it's helpful to have someone to rally around. So how did you get builders to come? They could be building over there. They could, go work on Bitcoin. They could go work in AI. How do you persuade talented young programmers to build on Base?
Ooh, relentless hard work. I wish there was one weird trick, but it really has been. Early on, we decided that we weren't going to kind of start with a token. And I think one of the things that drove us is that we felt like when we looked out at the space, we felt like a lot of people were getting distracted by the token. They were getting distracted by the money. And that was actually making it much harder for them to just build really good products and then build a really strong ecosystem. And so we basically said from day one, like, we're not considering a token. This isn't a part of our plan for now. And that meant that what we spent our time doing was talking to customers and figuring out how to build better products. Like literally, I spent hundreds and hundreds and hundreds of hours just talking to builders in the early days of Base, being like, what do you need? And what we heard from it, they need it to be fast. They need it to be cheap. They need access to distribution. They need access to capital to actually fund their initiatives. And so we've just been building the team, building the infrastructure to deliver all of those things. And so now I think it's, not controversial to say that Base is one of, if not the fastest, cheapest, easiest to build on chains in the world. And that the support that you get from joining the Base economy in terms of growing your business is unparalleled.
Yeah, and tell me about a couple of your favorite sort of applications that have been built. And first, is it kind of sort of fair to say in the blockchain world, it's a bit analogous to like, Steve Jobs gave us iOS and the App Store, and then all the app makers built the applications that made people love iPhones. So is it fair to say that like the Base chain is sort of the iOS and the store, and then applications came? And if that's true, tell me a couple like breakout applications you've seen arrive.
That's the perfect analogy. We think about Base as kind of a next generation open stack that enables people to build apps in this new way. That's fast, that's cheap, and that's global. And I think that's one of the most important things is that when you're building on Base, you're building your business and your app in such a way that anyone in the world can access it and anyone in the world can participate. Now, going to a few of those use cases, I'll kind of run the gamut of Base because I think one of the things that people often misconceive about crypto is that it's just speculation or it's just money. And the truth is that it's not. lot. So three use cases that I'm really excited about, apps that I'm really excited about. One is in that more traditional model. It's a protocol called Morpho that's built on Base that does pretty traditional, what you would think about as like a money market fund, lending and borrowing. People can put in collateral, they can borrow against that collateral. Other people can put in different kinds of collateral and earn yield on that. And that is an underlying protocol that's now brought in about $2 billion of assets on Base. And it's from all different kinds of lenders and borrowers who are coordinating in this open app to create these healthy lending markets. One participant is Coinbase. It's the thing that powers the new Lend product that Coinbase launched. It also powers the Bitcoin Borrow product that Coinbase launched, where people can borrow USDC against their Bitcoin. But there's many, many others. It's a whole kind of ecosystem of people who are contributing to this global lending market. So that's the first one. We're seeing lending and borrowing really grow quickly on Base. The second, which is not in the traditional things that people think about crypto, is social. And one of the apps I'm most excited about is Zora, which is really about enabling creators to actually own their creativity and then benefit from it. And so what that means is, it means when people are creating on Zora, it looks a lot like a TikTok or an Instagram, but every post is a coin and every creator is a coin. And what that means is, it means that when creators are putting their content out into the world, each post is monetized and they can earn instantly from it. And then all of those posts contribute back to their overall kind of profile value in a way that allows them to earn money as well. And so what we're seeing there is that creators are monetizing 10 times better than they've ever been able to monetize in the traditional Web 2 world. And that's accessible to creators all around the world. So it's not just in the United States. It's not just in developed countries. It's no matter where you are, you can benefit from this new social creator economy. And then
okay, Jesse, I want to
app,
interrupt you one sec. You gave me two great use cases. Morpho, which basically is like a new DeFi stack, easy to use, get yield, make money. And then in terms of this creator economy, break down a little bit how you get paid, because I know this has been the dream for years. Fix social, cut people in on it. Don't let Facebook and Google gobble all the profit. But just a little more slowly. How exactly? I don't know. I want to, I think I'm a rapper. I want to put my song on Base. I could do that, or I want to write a poem or a news article, and I post it, and I give you my content, which will enrich your ecosystem. How does that come back to me?
Yeah. So the key insight is that the content that people are posting into these Web 2 platforms is valuable. Now, most people don't have access to that value, but Facebook does, other platforms have access to that value, and they monetize that value through things like ads or subscriptions or other mechanisms that they use. Now, what we say is that on Base with tools like Zora, when you post, we actually turn that post into an asset, turn it into a coin, which then goes into the free market. And people can basically speculate on that value. So some people think it might be more valuable. Some people might think it might be less valuable. And they're basically trading in the free market to find the clearing price of that piece of content. And then every trade generates some kind of economic outflows, in the form of fees. And those fees get rerouted back to creators. And so you can kind of think about it like an attention market, where as people post, previously, they were just liking. And what that like was doing, it was signaling to Facebook or Instagram or any of these other players, hey, this content is valuable. Now, when people post, the market is discovering what's the value. And then that value is actually getting rerouted back to creators. And so go for it.
Yeah, well, give me an example. Show me someone who's made even like a couple bucks off doing this, because I get the idea. But frankly, I like to think I'm a good writer. But a lot of the stuff I write, I'm not, I'd be, fine if I got $5 less with it. But sometimes I write something viral, a lot of attention. That piece of content goes. Has that happened on Zora yet? Can you give me an example or two?
Yeah, it's absolutely happening. We just onboarded a creator the other day who has about 10 million followers on Instagram. I'm just looking for their name. FN Mecca. They have about 9.8 million followers on Instagram. They posted one of the videos that they made, and the market clearing price after a few days was that piece of content was valued at $36,000, and they earned around $7,000 in fees. And so that's just a creator coming in and people saying, hey, this piece of content is valuable. We're going to speculate on it. And that's going to put off these kind of economic kind of flows that then get routed back to the creator. So that's one example. Also, to give you another example, which is my experience, I'm one of the biggest creators on Base on Zora. And every time I post, I earn, ranges for my better posts. Sometimes I'll earn hundreds or thousands of dollars. For my less good posts, I'll earn like $5 or $10. But people are basically kind of constantly trying to figure out how much are my posts worth. And it's a ongoing, kind of value stream for me. And I think at this point, I probably earned somewhere like $150,000 over the last 6 to 9 months of posting.
That's really awesome. And I think, probably reality, it sounds like a bit like the YouTube economy. I'm sure you've got a bit of an advantage because you're a known entity. And so you've got a bit of celebrity baked in, but someone just starting out, they might have to grind for a bit, but then maybe they'll do something good. And
right. There's no one weird trick where it's like, oh, boom, there's this massive audience that's instantly just going to get your content. But I think that the easiest way to think about it is if you look at the last decade, you've had all of these people who've kind of risen to stardom in the Web 2 creator economy. And I think the opportunity now is to rise to stardom in the on-chain creator economy. But this time, instead of being in a walled garden where the platform takes 95% of the value, it's going to be in an open garden where you earn 95% of the value. And I think it's going to lead to much better outcome for creators all around the world.
Love it. Yeah, because this was the Web3 dream in like 2021 before Web3 became a dirty word and like Axie Infinity. But as happens, sometimes, you kind of misfire once and then the tech evolves and you can do it. Really encouraging. And real quick, if you're paid, it's in USDC, is that right?
Yeah, you can earn in whatever you want. So you can earn in USDC, you can earn in ETH, you can earn in your own creator coin, which is kind of like indexed to all of the content that you create. And so there's a lot of choice for users in terms of how they actually earn. Amazing.
And I want to get some other questions, but very quickly, what's the third use case? So we had Morpho, the DeFi platform, and Zora, the social. What's the third one?
The third one that I was just going to share is a bigger app, which is Shopify, which is we spent 9 months working with Shopify building this thing called the on-chain or the commerce payments protocol, which basically is a protocol that takes their whole kind of like back office commerce execution, which is, taxes and merchant of record and escrow and refunds and chargebacks, and moves it on chain into smart contracts. And then is rolling that out across basically all Shopify stores where you can pay with Base, you can pay with USDC at any Shopify store around the world. And the really crazy thing about this use case is A, it's just cool to see Shopify pioneering kind of this acceptance of crypto. But B, I think we got to see up close and personal just like how much more efficient you can build these systems when you build them on chain on Base. And so the systems that we're talking about for doing all of those kind of back office things, they're literally millions of lines of code in Shopify's legacy systems. And then we've distilled it down to hundreds. So like 800 lines of code in smart contracts that kind of distill out what are the core capabilities that need to exist here, and then put it onto this global operating system that's Base, and then let everything run through that. Really cool.
Love it. Okay. I guess I better ask you a hard one. And here we go. I think it's really impressive what you built, but at the end of the day, this is very much a Coinbase branded production. And owning a blockchain's got advantages. You get a cut of the fees, and it's even showing up in Coinbase's quarterly revenue statements, and that's awesome. That's to your credit. You built that. That said, if I'm sort of a competitor anywhere else, I'm gonna be like, this Jesse guy's got some skills, but I don't really want to enrich Coinbase. And then also meanwhile, here comes Stripe building their blockchain, Circle's building a blockchain. Every company's going to have a blockchain. And how do we assure that these things are actually neutral? And that's always seems just to be the peril. And, where, decentralization, you might say it, but in reality, it's going to be really, really hard not to put your thumb on the scale to favor, your allies or Coinbase, products. So just take me through that.
Yeah. So I think this is the risk, right? We end up in a world where you have all the corporations build these chains and they're isolated islands, and we've basically, taken a new technology but rebuilt the same systems. And, I think a lot of people can say, hey, we're going to decentralize, we're going to be neutral, but the real facts are like in the work, right? It's like, are you putting one step in front of the other to actually decentralize? And I think, we said it from the beginning and we've delivered on that over the last 2.5 years. Our goal with Base is to build a global economy. And the only way we believe we can build a global economy is by having it be on a decentralized platform. That's something I believe, and something that Brian Armstrong, CEO, founder of Coinbase, who gets to call the shots in a lot of ways, also believes and has been kind of very firm on from the beginning. So now, how are we actually doing that? Well, I think it starts with the technology choices at the beginning, right? We said, hey, we're not going to go build on an island. We're going to build it as an Ethereum layer 2. That was a big one, right? That meant that we could bring in Ethereum to provide this decentralization from day one. Second choice, we built on the OP stack. That meant we weren't going to go build our own proprietary stack that would be ours. We would instead contribute to an open standard that everyone else could participate in. A third thing is we progressed from stage 0 to stage 1 decentralization earlier this year, which is kind of this measure of decentralization of L2s. That was a big collaboration between us, Ethereum, Optimism, and many others. But I think a real moment where we said, hey, we're not joking around. I think many people said it'll never happen. And we said, no, we're just going to do this. And we're going to get to stage 2 next. And then, most recently, just last week, we announced that we're starting to explore a network token for Base, which, is 2.5 years in, and it's still really early. But I think one of the things for us is that as we think about how do we make this economy maximally global and maximally neutral in the way that you're talking about, we see a token potentially playing a really powerful role for that, where it can be a tool for further decentralizing the network, further aligning participants and stakeholders, and really pushing what's possible with crypto to make this a level playing field for everyone.
Okay, well, on behalf of my DGens out there, just got a simple question. Okay, Jesse, when token?
No specific timeline to share. And that's not because I have that information. It's just not something that we're sharing. It's because we don't have a specific timeline. If I'd gone on stage last week and said, we're exploring a token, and in the back of my mind, I'd known we had a timeline and we were just kind of like telling people we were exploring because that was the easy thing to say, that would not have been authentic. And for us, from the beginning of Base, we've said we're going to be authentic and we're going to build in the open. And so when we say we're exploring, what that means is that we're starting conversations. We've gotten so much good input in the last week. And over the next many months, we're going to keep getting input. We're going to keep learning. We're going to keep listening. And we're going to keep sharing updates with folks about where we are in our journey so that everyone's on the same page.
Yeah, that seems the right play too. And I saw Brian saying the same thing too. You want to do this cautiously and do it right rather than, fortunately, you're in a position to do that. You don't want to squander the goodwill you built. And Coinbase has got, doesn't have to, I think they'll be around in 3 months. So no rush to rush it out.
100%.
That said, though, who's a model for a good airdrop or token? I've seen hundreds of these things over the years, and sometimes it's done badly, and insiders line their pockets, and sometimes it's just technically they screw it up. So, what is is there another project out there you think has done the tokenomics just right?
Yeah, well, I'd say first off, tokens are unique. And so there's no one right thing that's going to fit to every effort. But, when we announced that we were starting to explore the token last week at Basecamp, which was awesome, by the way, we actually brought 3 founders on stage, the founder of Zora, the founder of Aerodrome, which is the largest decentralized exchange on Base, and then the head of product at Virtuals, which is an AI agent platform. For launching. And the reason why we brought those folks on stage is because when we look at the way they've launched their tokens, they've all done very, very innovative things. So Aerodrome really pioneered this fully fair launch model where there were no VCs, revenue goes 100% to token holders, governance is fully on chain, tons to learn from them. Virtuals invented this idea of kind of quote pairing where every agent that launches get paired with the Virtuals token, which kind of connects up all of those agents into the global economy. And then Zora took that model and turned it into what's now known as the Zora flywheel, which is basically every piece of content that a creator creates gets paired to their creator coin, which then drives all this value back to the creator coin. And I think the thing that's really powerful about both the Aerodrome model and the Zora model and the Virtuals model is that they all just said, hey, we're not just going to launch a token and have it be maybe a little bit of governance that's off chain. Instead, they said, we're going to launch a token and we're going to figure out how do we make the token run through every single part of our economy. Whether that's in how our revenue flows, or it's how new assets are issued, or it's how people are earning and participating, we are going to make it so the products and the economy would not work without the token. And I think that's kind of the gold standard, where it's really figuring out how do you use this new superpower that tokens are to make products and economies that have never been possible before. And the only way you do that is by integrating them.
That's so intriguing. Yeah. And I know, Brian Armstrong, I remember him telling me a while back this idea of having AI agents carrying little crypto purses. I don't know why I just love that analogy. And it would be interesting. You do your drop and maybe you need an agent. And that's, you could push the technology that way. So.
100%. And we're seeing this happen on Base today. There's agents that exist in the Base app that can trade for you, that can take your money, that can deploy it across different yield pools. It's happening really quickly because agents naturally speak code. And so they're perfectly suited to operate on chain on Base.
And very quickly, will there be a governance element? Because also thinking like, tokens give you governance, but in reality, no one uses it. But you could build it in such a way that it would be, the UX would make it easy to vote your token allotment.
100%. Yeah. And again, we don't have a specific plan to share here. But I think that there's been a lot of really good learnings on governance. And I think we're going to be looking at all those learnings and learning and figuring out how do we build something that if we do decide to do a token actually works for Base at a massive scale.
Yeah. Oh my goodness. It just feels we've come so far from, I remember in like 2016, 2015, the mantra was, I don't know if you're around for this, but blockchain, not Bitcoin. And it was going to be all private blockchains. This is a dumb company called R3. I always pick on them, but I knew it wasn't going to work. They raised all this money and they hated me because they said it wouldn't work, and it didn't work. But like, what do we learn from then, and what's different now from that like bad old days of corporate blockchain?
Yeah, well, I think like the biggest thing that's changed is that the technology has just matured a lot, right? Like back in 2015, 2016, it was the very early days of even having smart contract platforms. We didn't really know what they were good for. We didn't have stable coins. And now if you look back compared to then, it's like Base is fast, it's cheap. You have globally distributed stable coins. You have incredible developer tools. You have this, next generation of consumer facing UIs like the Base app that are giving people actually access to this economy. And so I think the first thing that's changed is that the technology has matured, and that's enabling real use cases to actually come to light. And then I'd say that the second thing that has changed that has gotten me excited is you have people like Coinbase who are not just saying, hey, we're gonna do a blockchain because, but instead are saying we believe that on-chain is a superpower because it's a new technology platform. And that if we take parts of our business and we move them on chain, potentially all of our business, and we move it on chain, we're going to be able to run that business 10 times better. And then not only are they saying that, but they're doing it. They're literally launching products that were impossible to launch before that deliver outsized value to their customers. And I think having a leader like Coinbase, who is really just showing people, holy crap, this isn't just an idea anymore. This is something that can contribute to the bottom line. This is something that can make the business more efficient. This is something that can kind of enable new consumer experiences. I think that is kind of the light on the hill that many, many other people are going to follow, because they're going to realize, oh, we can do the same things too.
Yeah, no, I feel like we're going into a new world, and it's so fun to finally see all this, rhetoric and promise actually start to come into fruition. Well, thanks for all the insight. It's been a great edition of Crypto Playbook, and thanks again for joining us, Jesse.
Yeah, thanks for having me.
So, Jeff, are you convinced that corporate chains are the future?
I wouldn't go that far, but here's the thing. One thing my takeaway in talking with Jesse, I think Coinbase made the right decision in making it an open source stack. I still think like private, proprietary blockchains are going nowhere and never will. But I do think the decision of creating like a Linux-like environment, I'm sure some people write in and say, no, this isn't really that. But at first glance, it seems to be that. I think, public code that you can audit is a good sign. So I think, that's, I think, the kind of table stakes to make this work, if it does work. What do you think?
Well, I guess the question always with these projects is how decentralized is it actually? And that continues to be the governing ethos of crypto, no matter how much TradFi or large firms like Coinbase take over the space. If they want a chain like Base or like Stripe and Paradigm's Tempo to actually gain followers, they need developers to come in. And I do think most developers do care about decentralization and permissionless networks. And it's still unclear to me whether Base really fulfills that vision or whether something like Tempo will.
Yeah, I mean, I think, the other thing, I don't want to sound like a Coinbase fanboy here, but even as they've become like this like giant corporate blob, they also have retained a bit of like original, crypto founding ethos in their DNA. Brian Armstrong, believes in decentralization. And I think promoting a guy like Jesse, who's a true believer, is probably good for the product energy and just kind of the vibe for what that's worth. So I think that'll buy them some goodwill. My only other takeaway quickly, Leo, is the idea of Web3, which, was all the hot thing in 2021 and then became almost a dirty word. It suddenly seems closer, and I feel foolish because I've gotten optimistic about this before, and then it's just been a disaster of like lies, scams, and horrible UX. But I think they've inched closer. I just think the UX is so much better, and this notion of rewarding creators, I just really like it. The Zora platform, I can't let that go just because the web is so broken. And if this can be a solution, I don't know. Too soon to say it will, but I'm like
slightly optimistic again that maybe Web3 could be done right this time. How about you?
Well, again, I think my question is, we've heard this pitch for so long. I mean, are there any Web3 apps that you're using?
Just want to go play around and check it out. That's true. I mean, I do think, but now there's acknowledgement. This stuff has got to be work as well as like Instagram to get any traction. But fair enough. But let's give it another year. We're closer. But what do they say, Leo? Early innings?
Yeah, I think maybe second inning at this point. We moved from the first.
Okay. Yeah, it took us 15 years to get from the inning 1 to the top of the second, but I'll take it. Okay, folks. Thanks everyone for listening. This has been the Crypto Playbook.
See you next time.
This was the Crypto Playbook, a Fortune magazine podcast. Our producer and editor is Ellen Estev. Our production manager is Sam Freund. Our executive producer is Lydia Randall. Fortune's head of video is Adam Bannicky.